Good news, everyone. My book about GameStop, the craziest story ever told, is now finished. Well, almost. Still waiting for the final draft. So, in the meantime, I think you should look at pre-ordering it or any one of the multiple fantastic, beautiful t-shirts that I have designed in order to sell with the book. Thank you, everyone, for your patience over the last few years while I have been finishing it very slowly. And I am really, really excited for people to read it. Link is in the description below. Enjoy the podcast. So, hello everyone. Welcome to another episode of Chatter. Today, I am delighted to be joined by Dr. Toghrul Aliyev, Senior Research Analyst at CCN, and hopefully I didn't butcher the pronunciation of your name too badly.
It is all good. Thank you for having me, Josh. It's very nice to be here.
No problem. Where's the name from? What's your heritage?
I am from Azerbaijan, and the name means, I think, something of eagle or falcon or something like that. It's it comes from Turkish names or something like that, I think.
Interesting. Okay, eagle, falcon, soaring like we will be. Well, like GameStop will be towards the moon, hopefully.
Yeah.
I think the best place to start is to ask you where your first experience hearing about GameStop was, about an interesting company to invest in, and what had you heard at that point?
I heard about it in April 2021, so I was like a late bloomer, I would say. I think it all started in January when I started getting interested about investing. And I found this video from Andre Jig. He was talking about dividend investment. So I started learning a lot about that. And my first purchase was, I think, as an Apple stock. And through that, I accidentally found a post on Reddit because I started getting interested in investing. And I found something about GameStop. So I started learning a lot about that, and I invested into it and into AMC. And I invested in AMC about 10, and it went to 30. And GameStop, I think I invested very, very badly. I invested at the top, and it dropped. So I was unlucky.
Well, I mean, those early buy-in prices were not ideal for some of us. I remember my first shares were bought at $280. So that would be 70 right now. So that's, about triple my current cost average, So it's really come down in price quite a lot since those initial days of madness. But I mean, that was right at the peak of the crazy stuff that was happening. I think it's interesting that you came on board in April 2021. So did you purchase shares at that time?
Yeah. That was just, I purchased just one share.
Okay.
Of Apple, but I purchased about $4,000 of GameStop at that time.
Okay. Interesting. So in April 2021, what made you think this looks like a good investment? Because that was 3 months post squeeze or post January squeeze. Like what to you said this isn't over yet?
Honestly, just through posts, etc. I had zero idea about investing at that time. I just started learning, so I've come a long way from that time, but still I'd say it was just through posts on Reddit and YouTube videos that were showing me all these opportunities, all these MOAs and other things like that.
So at that point, you didn't really know much about investing. So what led you to then become like a senior research analyst at CCN? Like, how does one go from not having a great deal of investing experience or knowledge to then, 4 or 5 years later, working as a research analyst? Like, well, how did that happen?
The funny thing is, I found about investing while I was still in medical university, and I needed money. So at that time, I found out that you can post on Reddit. There's a group called Cryptocurrency. you can post there, and if the post gets enough traction, you can get about $50. So I thought, I can make like a couple posts per day and earn some kind of salary instead of working like a typical student for minimum wage.
Yeah.
So I did that. It went viral. It got about 1.5 million views.
Really?
And because of that, some random guy emailed me and said, I want you to, he messaged me on Reddit, and then we went in to speak on email. So she asked me to make similar posts for him, similar articles, but he will pay me for that. So I was like, oh, that's cool. And he was paying generously. So I started working for him. I built some kind of portfolio, and then I started moving on and on and on. And next stop was Cointelegraph, where I grew a lot. And the last stop is CCM.
How did you like working at Cointelegraph?
It was amazing. I was in the research department, and I'd say in 1 year that I've worked there, I have basically learned 10 times more than I could have learned on my own. So it was very nice there.
That's good to hear. So then, to move on to the reason that I brought you on the show, your report on GameStop, titled GameStop's Next Chapter, Profits, $6 billion Balance Sheet, and Bitcoin Treasury Strategy Analysis. So you begin the report with quite a lengthy section on Ryan Cohen himself. He has become, I would say, an increasingly controversial character, although it seems like a lot of people have faith in his abilities. How would you describe his style of business?
He's a contrarian. He is hands-on. He has a hands-on approach. He is a very pure person, I'd say. He has mentioned that a lot of times, that he hates how corporate America is structured, the way that the C-suite executives are earning substantial amount of money for basically losing shareholder money, right? So for destroying shareholder value. And he's very, very passionate about that, honestly. I'd say, yeah, he's a very pure guy. I don't know why people are so controversial about him, because he has an approach of, he has a contrarian approach to investing. So he finds basically dead companies, and he has a combinatory effect of Warren Buffett and Carl Icahn. So he finds undervalued companies as Warren Buffett, and as Carl Icahn, he messages them, sends them letters that, hey, you need to fix this and that. So I understand that many are finding him controversial because of Best, Bad, and Beyond, right? So because he invested in it, and I think he exited it literally just a couple of months later, and people are saying that he dumped on some, but he's a completely, it was his idea to invest and his idea to exit. He wasn't dumping on anyone, and everybody else who chose to invested on their own accord, not because he made them do that. So I think that thinking of Ryan Cohen as a controversial person, as a bad person, as a grifter, or anyone else is kind of, it is just not right.
So what do you make of his tweets? I'm in the middle of editing his a chapter that's almost exclusively about the tweets, right? So
yeah,
they're called the Twitterverse breadcrumbs.
Yeah.
So basically, he's just out there tweeting what could be construed as a whole bunch of stream of consciousness nonsense, right?
Yeah.
Or on the whole other end of the spectrum, he could be detailing in great detail every single move that he plans to make way ahead of time for people who, spend the time deciphering what on earth they could mean. Where do you sit on that spectrum of what he's trying to do with his Twitter account?
I think 99% of people that think that they have to decipher something are wrong. It's just like nonsense tweets. He's just having fun. And sometimes he is just writing his thoughts, like, as I said about the executive compensation, that they have to invest their own money, etc. So, but basically, I'd say she's just blabbering stuff just for fun most of the time.
He seems to he spent quite a lot of time railing very hard against like executive compensation, about
Yeah.
against as you mentioned, like his desire for shareholders to create actual value for or for board members to create actual value for the company that they're shareholders in. And
Yeah.
what do you think? Why do you think he seems to be, not quite uniquely, but in a very small minority of people who is frustrated by this and openly willing to say something about it? Like, why do you think he's the one sticking his head above the parapet?
I think it's just how he was, how his parents taught him, honestly. What kind of example he had compared to his father, right? What he saw every day, on a day-to-day basis, when he was a child. It's very important, and at the same time, of course, like as time passes, you change a lot, but still, most of those board members are in that structure, in that ecosystem, right? So why they should speak against that? They're earning money for nothing. They're earning money just for, they're basically doing nothing. And you can see that everywhere, not only in like C-suite executives, but also in other people, just random, I don't know, coder or marketing guy or writer or anyone else, right? You can see that there's really not that much people that love hard work, and especially now, most people think that you don't need hard work to be successful. Everything should be given to you on a silver plate, which is an incorrect way to look at your life and basically as a world as a whole. So things are just in that ecosystem. They're benefiting from it, and why they should change that? Just why?
Yeah, I mean, well, the argument would be to build stronger companies, given that that's what shareholders or board members are supposed to do. But it's not always the way things go, unfortunately.
Exactly.
So since taking over, Ryan Cohen has had quite a significant impact on the board and the people that are operating at the executive level in the company. Obviously, being one of the largest shareholders and chairman sort of gives you a bit of influence in that area. How would you describe the kinds of people he seems to like to work with, and what do you think he's trying to assemble in a team of people sitting around him?
I think it's basically the same kind of people that are similar to him. So they're hungry, they're hardworking, they want to change something, right? They want to do something good. And but the most important thing is that they're hungry, very, very hungry. They want something a lot. So that would be it.
Hunger. Yeah, I've heard him use that description as well. I think he said he likes people with a chip on his shoulder, which I thought was very interesting. Yeah. Which, I mean, maybe it sort of depends what kind of chip. You don't want, someone who has weird obsessions with, I don't know, mayonnaise or something.
Or ketchup.
Yeah, ketchup. Yeah. How deep have you gone inside the, I don't know, the GameStop community, like the apes? How deep have you been on Reddit, or on Twitter, or have you stayed away from those things and you've sort of just tried to focus on looking at the business itself?
Up until 2023, I was reading their DDs every single day. basically seriously Peruvian bull, Cryan, all the bot farm, I think. So there were a lot of people. I forgot the name of the guys that put banana up his ass. So I've seen it all.
Sometimes I just forget how ridiculous some of the things that happened are. I find that like going back through my notes for the book, I'm like, they really did that? Yeah. The guy eating the whole jar of mayonnaise nearly made me throw up.
Yeah, oh, I forgot about that. Yeah.
Oh. So when Roaring Kitty first invested in the stock, the thesis from Wall Street and the financial world was basically that physical game sales were over, brick and mortar was over, everything was going digital. And Roaring Kitty basically came out and said that he believed the opposite was true. That this trend was not playing out in reality, that people still wanted physical things, they wanted a real shop to go to, etc. How would you say that thesis has played out over the past 5 years?
I'd say quite successfully. They have changed a lot. The only issue I would say was diluting their shareholders technically, right? Because they were selling a lot of shares, but there was no other way to get money. So you cannot blame them for that. And because of that dilution, they now have a king-sized cash pile of about $6 billion. So zero debt, about like $400 or $500 million of short-term debt, which is basically nothing. You can always consider short-term debt as that is going to be covered by your inventory or something. So you can basically, if it's not really, really big, you can basically always ignore it. What's important is long-term debt, and it's zero, basically zero. So they have improved that a lot. They have improved their gross margins. They have turned positive on their net income. They are lowering their expenses drastically. Their executive compensation was about $55 million in 2021, just because the stock went up. The executives, because there's some rules there how they can get bonuses, and just because the stock went up, they attributed it to their successful turnaround, etc. But it wasn't that. It was just small gamma squeaks, right? And they earned about $55 million. At the moment, the whole board earns no more than $2 million. It's just an insane reduction. So it's playing out perfectly. And when it's a turnaround opportunity, you have to wait like 3 to 5 years for it to play out. And for now, it's playing out very, very nicely. I'd say we need to wait a little bit more, maybe another 3 years for it to play out fully, due to Bitcoin mostly.
Yeah, we'll get to the Bitcoin purchases. Don't worry. I'm just trying to go logically through everything. So one of the things that is quite obvious from the graphs that I'm just scrolling through the graphs for people so they can get an idea of things like the annual revenue over the past 15 years, revenue per store, annual gross profit. So it seems like the actual physical amount of money that GameStop is taking in as like a headline revenue figure peaked in 2017 at around $3 billion and then went on a careening downslide over a number of years where, they were cycling through a lot of CEOs. They were, not treating the business particularly well.
Yeah.
And then it hits rock bottom in 2020. Probably COVID related as well as this.
Absolutely.
And then since then there hasn't actually been like a marked increase at all really in gross revenue. However, obviously their margins and profits have gone up. So where are they making these savings, and how have they turned the company profitable without increasing revenue above 1.25 billion-ish?
The problem is they had about 6,000 stores and most of them were not profitable. They were just eating money. So they started closing it, actually even before Cohen. So they started closing it, and when Cohen became a CEO, and at the moment, I think it's about 3,000. So they have reduced it about 55, 60%. It's a huge reduction. So logically, if you reduce that, you will reduce revenue too, right? Because, for example, if you had 100 stores and more of them, like most of them will sell something, right? So if you have less stores, you'll sell less. It's just logical. So you'll have less revenue. But what's important is to find which store is not really giving enough for the company, right? For example, it just barely makes it. It's either breaking even or even losing money. So you are just closing them all down. You're just forgetting about them. And you're leaving the cash cows, the ones that pay you the most. So because of that, the revenue fell down, but because those stores were the main points that brought value, main ones that brought profit, the overall revenue, overall profit didn't change. And that is why gross margins improved and other margins improved. So the way they're cutting costs is basically there. And also they have, basically just stores, I'd say.
Yeah, it's interesting.
And executive compensation and, other stuff.
Yeah, it seems like they're actually making an increasing amount of money off of hardware compared to software. So I'm currently looking at the GameStop revenue by segment. So collectibles and others has sort of increased a little bit over the past few years as a percentage of revenue. But what's really interesting to me is that software, since it seems 2011, has been decreasing as a portion of revenue. The software, does that mean just the games themselves?
Everything connected to them. So it's video games. It's basically it's like PC games. It's everything connected to that. So maybe some DLC, etc., etc.
The other interesting thing is watching them diversify as well, away from just hardware and software into other collectibles and whatnot, especially Pokemon cards, and offering card grading, I think is a fantastic move. Is there other areas in which you think they could expand their offerings to see those gross revenues or gross profits go up? Is it possible that we could see them increase their annual take, or do you think that they're at a ceiling of where they can be in terms of the size of the gaming industry and what's possible with a brick and mortar retailer?
I think that they're kind of at the ceiling. The most they can do is that they already did. So they started selling some kind of hardware like TVs, maybe gaming accessories, and etc. So I'd say that that's the only thing that they can do right now is just improve costs, improve margins, and that's all. It's not going to be something like tomorrow they're going to earn, like Palantir or some other company like that increases their revenue by 20, 30, 50% per year. That's not going to happen. So the best case scenario is for them to improve it to about 200, 400 million. And 200 to 400 million net income would be just purely from operations, not from investments like right now. So at the moment from operations, they're doing minus 20 million. So they're earning basically most of their money from interests on their cash reserves.
That's funny. Do you expect to see that number improve in the next set of filings? No, not the cash reserves. The net margins.
You mean like when they will send the Q2, Q3, Q4?
Yeah.
Yeah, I think so, because their leases are ending this year. So for the stores that they have closed, so I'd say that yes, they will have a huge difference in NPS, etc. And especially due to Bitcoin, it's going to rise very drastically. But that's going to be just one-time thing, and after that, it's going to stabilize a little bit.
How important do you think their Power Up members, like their member community, is? So I saw you highlighting it, and it says 2023. You talk about how the Power Up was Rebrand to GameStop Pro, with a higher annual price, $25, which is really nothing. Let's be honest here. You get 5% off pre-owned games, 5% off collectibles, 5% off clearance, $5 reward coupons, 2% back in reward points on purchases, and early access to product drops. That's a pretty good deal for $25. Do you feel like that this is Ryan Cohen's attempt to recreate some of the like specialty customer service that he had at Chewy? So at Chewy, I know he talked about how they wanted to have the operating logistics and sort of smoothness of Amazon when they were shipping out stuff for the pets, but they wanted it to have a more personal touch, basically, because people love their pets, and if a company is nice to their pets, people tend to remember it, and you can very easily generate like quite a loyal customer base. Or I know he's talked about how GameStop is very different. Like the customers aren't very sticky. Like people will go to they could go to the GameStop store, and if it's $1 less on Amazon, they'll just order it from Amazon. Do you think the membership is part of him trying to create that sort of Chewy like loyalty?
Absolutely. Well, it's basically a retention thing. So because they have this subscription, so if you're paying it, you're more likely to use that coupon that you got, right? If you didn't get it. So imagine you are going to GameStop and you know that you have that coupon or anything, right? You likely buy something, maybe even buy something more, right? So it helps with retention. It helps with people coming back. It helps with people buying more even. So I'd say it's a huge thing. And the way that they increase the prices, it's the right thing to do to help the business.
Nice. Yeah, I think so. It's going to be very interesting to see if those members get further benefits in the future. So to move on to the thing on everybody's lips, the Bitcoin Treasury. How exciting! So obviously GameStop issued convertible notes amounting to $1.3 billion with the contingency for 200 million more if the original purchasers wanted them to be sold outside of the United States, so to some international investors. And then at the Bitcoin conference, Ryan Cohen announced the purchase of 4,710 Bitcoins with no purchase date or cost, interestingly.
Yeah.
So people had obviously thought that there was a chance they would just splurge the whole 6 billion, right? And I was one of those people who thought that was maybe a possibility. I mean, it doesn't seem like a fantastically clever business move, maybe. Or maybe it does seem like a very clever business move. Depends what your perspective is. Why do you think they chose to invest in a Bitcoin reserve? Why do you think they only invested somewhere in the range of 400 to 500 million, given that they're sitting on billions, and they raised 1.3 billion specifically for the purpose of purchasing Bitcoin for a Bitcoin treasury? And do you think there was more purchases to come?
So, well, let's get with let's start from the start. So the first thing would be why they bought only 400 million, right? If they bought at 75 or something, right?
Yeah.
So I'd say because Ryan is a bit conservative, and he aims to improve GameStop's through operations alone. So maybe he's thinking of using the rest of the money for acquisitions. And in my opinion, they could have just used the whole thing, so 1.5 billion or maybe even 2 billion, about like 30%. So the rest would be used for generating incomes through interest. Okay, let's say like 30%, 20%, and like 40% will be used for acquisitions. So that would be kind of a smarter move, right? And I'm not sure if Ryan knew a lot about Bitcoin before, if he's skeptical about crypto or not. If it started to improve when he met Michael Saylor, but I'd say that he's a bit conservative, and that is the reason why he bought only 400 million. And again, we don't know when he did that. So let's imagine that the cycle is left translated. So Bitcoin will not go up and it's going to go down, right? It's going to be a big problem, for example, if they have invested all of that. And the second thing is that if they have invested all 6 billion, that was at the moment their reason why they are surviving. That's the way that they're earning money from the interest, right? So if they invested that, they basically had no money, and they would start losing it because if I remember correctly, it's minus 20 million. So they're losing every year about, it improves year by year, but last year it was minus 20 million. So that money has to come somewhere. And you also asked a couple more questions. I forgot them. Could you repeat that?
Yes, sorry. So so we had, why would they purchase it? And then we've got to, why was there such a small amount? And question number 3 was, will there be more purchases in the future? Do you think this is a dollar cost average sort of strategy he's attempting to do?
So why they purchased it is because their business is, as I said, there's no growth potential. So if they will grow, it's basically just improving margins, etc. So they have to find some kind of a way to create shareholder value, and that would be either acquiring some companies or doing what MicroStrategy did, so buying Bitcoin, or maybe even all combined. So that would be a primary reason. And will they buy more? I absolutely think that they will. And I made a conservative projection that if they announce the convertible notes offering every year for 1.5 billion, right? And they bought about, at the middle of the power law, which is a predictive model for Bitcoin, and it follows it. So if they bought at the middle of that, then they would have about 66,000 Bitcoin, and that would be valued by 2032, depending on the price, from 500,000 to 1.5 million. That would be a huge amount of money. And and this is conservative, okay? So they can announce more convertible notes. They can do something like Saylor did, 42 billion. We don't know that. So, but if we go through a conservative way, from a conservative point of view, I'd say that there is an opportunity that they will buy more.
Do you really believe that there is no upward growth potential on the current business? So you think that the only way that the business grows substantially is through diversification?
Yeah, absolutely. The reasoning behind this is that they're closing down stores, and they have already closed more than 55%. So how are you going to increase sales in those stores if people are basically buying everything the same way, right? It's not like you're going to find some kind of new people. You basically have I'm blabbering some kind of bullshit right now. The logic behind this is that they did the most they could at the moment. And the only things that they can do is diversify into some other area. And this is why they diversified into the collectibles. This is why they're doing that. And this is why, for example, they went away from software and started to focus on hardware more, because software represented about 60 to 70% of their revenue before. And as I pointed in the report, people started buying digitally 96% of the time. And 4% is only about, or I think 7% is about that. I think that would be physical. So they improved their website to turn into more of a rather than brick and mortar to an online e-commerce business, right? And Ryan had huge success in that because he had experience building that kind of website, and also he built Chewy, and brought it to 3.5 billion. That would be basically all that it can do. And as I said, there's only two ways at the moment. It's either three, I would say: improving margins, acquiring some kind of a company, let's say Newegg or Group or something like that. And the third point would be Bitcoin. So if they do all three combined, it's going to be an insane opportunity.
Yeah, well, here's hoping. What sort of companies would you say they decided to go with, like a mergers and acquisition sort of strategy going forwards? What sort of companies would you see him buying? Obviously, there was the Bed Bath & Beyond thing that happened 2 years ago.
The baby from them, yeah.
Yeah. And it seems like he went in with the hope to turn it around, but they weren't. The board wasn't really open to enough radical change.
Yeah.
At which point he was just like, "Well, right, okay, fine, I'm out." What sort of companies do you think he would be targeting? Would he be targeting things that fall into this basket of brick and mortar sort of retail stores, or would you say he would go more along a digital software tech, something more modern and less physical?
Honestly, I have no idea about that, because you have to consider what they're thinking, what the board is thinking, and they have experience in e-commerce. So likely they're going to choose something in that area, right? Something that's compared to GameStop, not about games and things. It can be, I don't know, towels. It can be anything basically, but it needs to be something that Ryan Cohen or his executives are familiar with. So I doubt that they're going to go with, say, AI. They know nothing about that. They have never built anything like that. They have no experience in that. So I'd say that would be the best option for them to go with e-commerce, is the things that they know a lot about.
What do you think the NFT marketplace was for, and is that just shelved now? Do you think it's sort of just a project that they've declared dead?
They are continuing to update their trademarks, so possibly it can come back, considering the regulatory environment right now, because as you know, Trump is more chill compared to, say, before, like how America behaved before, or Gary Gensler, how he basically destroyed every single company with lawsuits. So I'd say as time goes by, we'll see. Maybe they will do something like that, or maybe Ryan will turn to Sailor and be a Bitcoin maxi.
Can you see that happening?
Nah.
No. Why do you say no? Just because of what you said about him being conservative, or?
Yeah, Sailor is a bit and like a person who is more obsessed. He's a very he's very obsessive. Ryan is a bit chiller. He's swole, so not in a bad way.
Do you think the shorts ever covered?
Possibly. We don't know that. Possibly they did. It's been like, what, 5 years? Possibly they did, but we all know that they use like total return swaps. They used deep in the money options, dark pools, etc. So there's a lot of opportunities there to cover them, and for people to not know that they are there. But you have to consider, what data do we have? We don't know that. So and if we don't know that, we should think that they're not there. But considering how many red flags were there, considering, as people say, there's no smoke without fire, it's very strange. So I'd say I'd keep an eye on it, but not focus on it fully, because it's just is just one opportunity, one of the opportunities for people to earn a good amount of money, right? If the short squeeze happens. But if it doesn't, then the opportunities from Bitcoin, from turnaround opportunity, from acquisitions, from, business improvement, etc. There's other opportunities too.
Why do you think the price dropped after the announcement of the Bitcoin Treasury officially? Every other company that's announced it with much smaller holdings has seen their share price increase. Why was GameStop not able to do that?
You mean when they announce that they already bought, or you mean when they are planning to buy?
No, when was it yesterday? When Ryan Cohen announced the 4,710 Bitcoins.
Yeah. Yeah. So I'd say one of the reasons would be, I'd say maybe the main point would be that they didn't invest all the money as people wanted, or at least about like 2-3 billion. And the second point would have been that they didn't announce what date they purchased it. So was it at 75, at 74, at 80, 85, or maybe they bought it today at 105, 110, or maybe even a couple of days later, like at the top 111, right? So we don't know that. Hence, and markets don't like this kind of things. They want certainty.
Yeah, so it was a buy the rumor, sell the news sort of deal.
Yeah, and that's too, actually, yeah.
What do you think a fair market price is for one share of GameStop at this exact moment?
Yeah. At this exact moment?
Yes.
About $20.
20. Interesting.
Yeah, 20. Because if you look at DCF model, and if you consider their cash reserves, like everything, their inventory, everything, like book value, etc., you come up with about $15. And if you had about 20% premium for leadership, for Ryan Cohen, for retail following, for the brand value, etc., I'd say it would be about $18 to $20. So, and when you look at the chart, it always bounces through that area. So it always drops there and then bounces to 35, 40, even 60, and then drops back there and then goes up again. So it's a very good area to buy it, and likely you will not lose money. It's a very high margin of safety there. So it's a perfect point to buy. Anything right now is a bit risky. At the moment, it depends what they're going to do, right? For example, if they're going to buy more and more Bitcoin, and we know that they will, for example, then, and say we know the futures, they'll have, let's say, like 10 billion Bitcoin, then yeah, this price is a steal, right? Because you have to consider NAV premium too. But at the moment, yeah, I'd say 20, about 20.
Last question then, because I'm aware we're rapidly approaching 5 o'clock. What do you think, how do you think Keith Gill, Roaring Kitty, default value, however you want to call him, how do you think he ended up with 5 million shares? And do you think he is still a shareholder today?
Before he invested in GameStop shares, books in his portfolio, and as he said, he was aiming to do like 50% ROI every single year. So and he is a good options player. He knows that very well. So considering how cyclical GameStop behaved, and if he knew how it behaved, maybe he did it through that, or maybe he invested into other companies using GameStop money and increased his, reserves and his cash, etc., through just pure investment and trading. And does he hold it right now? I don't know. I think that the amount of money that he has just doesn't need to focus on one thing. He can just forget about it. And of course, I don't know how he thinks in that kind of sense, because maybe he loves that thing. Maybe he loves investing in researching companies like that. Or maybe he just wants to put everything aside and have fun with his wife, so he can just invest it in Magnificent Seven. I don't know, maybe some deep value stocks that he found, or even S&P 500, or maybe even crypto, and she's just having fun, right? Or yeah, it's possible that he still has some kind of amount of GameStop shares. You have to also consider that he has such an immense presence, that he has so much money, that if he bought a certain amount, it's likely that he has to file that, because he will just represent a huge percentage of the shares.
Yeah, I'm not sure. We'll find out at the next shareholders meeting in a couple of weeks. Dr. Aliyev, I really want to thank you for your time. It was a very interesting read, being able to really understand the fundamentals of the company and see how it's changed both before and since Ryan Cohen has joined. So yeah, man, thanks so much for your time, and thanks for putting together this report. I highly recommend anyone who's interested in this go read it. I've been pulling up all the stuff from it as we've been speaking, so the link will be in the description for people to check out. Is there anything else you'd like to plug before we finish?
Sub to my Twitter, maybe. It's Toghrul, and I have a financial newsletter where I teach people finance. I basically make myself learn something every week, and then I point that in the newsletter. It's called Financial Sixpack, substack.com.
Okay. Well, I'll put the link for that in the description as well. So yeah, thanks very much, man. It's been a pleasure.
Thank you, Josh.
Hey, listeners, real quick. Do you ever find yourself sitting watching the stock market like this? Well, now you could instead be ordering my book like this. It's the story of GameStop. You can purchase it with a hoodie, with acknowledgements, or just with the early backers edition. It's all about the GameStop story. It's the real story, not just what you've seen on films. It's exactly what has happened over the last 3.5 years. And with DFE back, I'm finally able to draw a conclusion to my book. Please pre-order it. It really helps me out, and you will get it eventually, I promise. Hopefully this year.